Welcome to the Divorce Allies podcast, a podcast and video series where we dive into all things divorce, the process of creating a settlement offer with a team of financial professionals, divorce mortgage, parenting, and relationship coaches. We cover all the areas of the divorce settlement process from financial to even emotional well-being. I'm Anna Graham, the team's small business mentor, helping our members explore the potential of their next chapter. Today, I'm with Melissa Gragg, our financial mediator and negotiation expert. This episode, we're reviewing a settlement case study and pulling up our spreadsheet in real time and entering some data so you can really take the information we've provided in previous episodes and seeing how we do it in real time. So, Melissa, welcome. Thank you for being on another episode. I think today is going to be really helpful for kind of that visual effect. I think even me personally, I need to see it to really understand it. So, your spreadsheets are awesome. It's going to be a great episode. We recommend watching this, not just listening. So, you can find this on YouTube if you're hearing it on another platform. So, thanks, Melissa. If you want to just give yourself a brief intro, that would be awesome.
Sure. My name is Melissa Gragg, and I am a financial mediator and really been helping people for the past 20 years get divorced in some capacity, either through litigation, which is the normal court system, or mediation and even collaborative divorce. So we've created some settlement spreadsheets that we think really put some visual perspective on like what is a settlement offer, because most of the time people are thinking about what it is, but they don't conceptually, like they can't see how it could be pulled together in a concise format.
Absolutely.
So my specialty is in the financial realm of divorce and kind of guiding people through how they can do some of this for themselves.
Yeah. So we understand that every divorce case is not the same, but we've come up with some parameters that cover at least an average or like a blanketed case. So we have another visual of this. I'll pull it up. Melissa, if you just want to kind of go through what we have here and why I guess you came up with some of these features of our case studies.
Yeah, and this is kind of showing you a little bit about what we do in the Divorce Allies. And so the Divorce Allies is going to walk you through, these kind of typical scenarios and what to expect in negotiation, what to expect in how you present your settlement offer. And so as we're looking at what is a typical situation that we encounter, I do hundreds of valuations every year, and typically half to 75% of them are in the divorce arena. So a lot of times people will have a house and two cars. That's kind of normal. And then you typically will have a stay-at-home parent and a wage earning parent. So either somebody that's out there that has an actual job and they're working for a corporation, or they're going to be having their own side hustle and maybe they're making money by a 1099. So the first one's a W-2 wage, the second one's a 1099, and then you could have them owning a company. And the company could have reported their earnings on your personal tax return or on a company tax return. So a lot of times we'll see people with typically a checking and savings account. They may have separate, they may have joint, they may have multiple, so a joint and then each have separate. You'll typically have some sort of retirement plan. So either it's a 401k in the company, or it's something that they've been putting aside, like a normal IRA. And then it could be like a Roth IRA, which is post-tax. So those are kind of normal. A pension, typically, like we're seeing teachers' pensions, you could have railroad pensions. You could be looking at like a regular corporate pension. So normally those are facilitated at some point. You worked at a company and they could be sitting out there. Sometimes they're sitting out there and we don't remember them when we're getting divorced because they were at a prior company, and we only get those statements maybe like once a year, right? So you kind of have to keep up with where it's at. From a debt perspective, a lot of times in these divorces, we're seeing more debt than cash. And if there's any value, it's in property. So it could be in, rental property or that primary house. Mm-hmm. So a lot of times we'll see mostly, significant credit cards. there could be back taxes, there could be student loans, there could be car loans, and then you typically will see your mortgage. The kids, normally, like this is just a typical situation. You'll have two kids. Sometimes you'll have them in private school or public school, but that is normally an issue. If they are currently in private school, the discussion is, are we going to keep them? Who's going to pay? And then one layer that we add in occasionally is that, children have different needs. And more often than not, we're seeing more special needs children or children that, are on a spectrum in some capacity. So they could be really gifted and need some additional resources in the school system, which is why they're in a private school. Or they could be challenged in some areas, either fundamentally, with an autism diagnosis or ADHD, but also just in general, when you're going through a divorce, whatever the kids' symptoms are, or whatever your symptoms are going to escalate. So in that capacity, we're really looking at, is there anything around the kids that needs to be addressed?
Yeah. So when we're looking at this, I think this is quite, easy to go through. Okay, what's my mortgage? How much? I can go on Kelley Blue Book or whatever, these different websites to pull some of this information. Is there anything that's not on this list that you see people kind of realize down the road? Oh yeah, I do have that. Or oops, I forgot about that. Something that, I don't know, is maybe tucked away, they don't talk about, or is just maybe
Yeah.
not common knowledge.
I mean, the three areas that I think people are going to argue in court and you're going to push yourself to litigation. One centrally is if one of you are a little toxic. And toxic could mean, have some behavior patterns that are not conducive. And so they could be addiction. They could be, some abusive situations, and really, or a narcissistic spouse. Okay. And that diagnosis is, typically not one that is known, but they would be displaying narcissistic tendencies. And that's typically, making somebody want to be in pain or hurt them during this process. So if you have a toxic situation, that's one thing. A lot of times, because we're getting divorced, we have a toxic relationship. Okay.
Mhm.
That's maybe not conducive. So this really is, you have a toxic individual that is seeking to harm the family in some capacity, or their actions are causing harm. And so that's one kind of total thing that could keep you in the court system. But the other two are going to be like a business valuation or a business, because that's where we have our income coming
Mhm.
in. That's where all the money for the family is being generated. That's where we have greater likelihood to lower the income in there because of tax purposes. We don't want to pay taxes, so we might put more personal expenses in there. And just generally, that's where one person has hyper control over the money, the bank accounts, the information, and one person may not. Even if that other person, the stay-at-home parent, has worked in that business, they might have a huge knowledge about the business, but they don't maybe have access to all the financials, so they don't know what's happening. And they may get into a situation where they're like, wait, we somehow have this great lifestyle, but it doesn't look like that on the tax returns or on the bank statements. And so the third area is really going to be if you're hiding things. And
Mm.
so you can have a business and just be running some personal expenses. That's really easy to deal with. We just adjust it in the valuation. No worries. We don't have to do a lot other than understand where those personal expenses. The third category is if they really are hiding assets. And so this is going to be an area where we're going to talk about inheritances, and that creates a separate asset. Or if you had separate, this is for second marriages, gray divorces, things like that. You may have that you came into the marriage with stuff, so you had separate bank accounts, you had separate retirement, you had a separate house or a condo. And you're looking at to see if those things remained separate, but typically a separate issue is a legal issue. And so you have to fight that in a legal setting in some capacity, or you have to agree to, like, hey, you know that I got an inheritance of $100,000. Will you give me credit for the fact that that's mine? And you might have a discussion of like, well, no, I don't think it's all yours. It's, portion. So that's where you get into some of the negotiation. If you have hidden assets, if they're trying to do crypto or gambling, things like that, or separate, they're going to have to claim that they should get more. And that's usually where you would use the court system.
Yeah. And I'm just going to pull this down before we transition to the spreadsheets, but I just wanted to mention those things or have you mention those things, not for our listeners to go obsessively search for certain things that maybe aren't obvious, but just so you're aware. So when the time comes and you're ready to make this sheet, or even if it's on a piece of paper, you can kind of note like, is there crypto in this situation? Is there an inheritance? Just note it. No one should ever be spending, their whole sleeping hours just searching for these things, but it's just an awareness. But kind
And
of
it's
going,
it's for both people. It's for
yeah,
both people. If those are things that are like, if you have inherited wealth, if you have a condo that you came into the marriage, if you have things that you've already said were going to be to your children and they have something to their children, those are usually areas where people will have a disagreement in their perspective of how they saw it. So when I received the $100,000 of inheritance, we talked about it and we agreed that it would be for the family, and we put $50,000 in to buy another house and we agreed it would be for the family. And now when we're getting divorced 20 years later, I want to say that it was all mine and what portion is mine. That is typically what you're going to be fighting about. So if you don't have some of those things, or those are the things that you would want to protect if they're in your space. So anybody would go and protect those, and a lawyer would tell you to protect it. In mediation, you're going to talk about it and you're going to say what's reasonable, what makes sense, because what somebody is saying is it's not fair for you to get everything and me to get nothing, or vice versa. And so really that's what we're going into, is like we start to try to grab on to everything that we think we deserve, or the court, or or an attorney or somebody has said that the court is going to give us, when in the reality is some of those are a separate issue, is a legal issue, and you have to prove it. So if I believe that I have a separate asset and it's mine, I have to present evidence to the court that would say that it is true.
yeah,
And the same goes to if there isn't the evidence to prove that out, then it's better to have a discussion about it, because maybe you guys, there's similar concessions for each side. There's gray areas in all of this that you can either solve in mediation or you can solve in litigation. And it typically depends on, is that other spouse highly toxic? Like, do they want to see you suffer? You may have to utilize the court system to do those things. But if you don't have them, and it's literally like house that has a mortgage, that has a statement, a bank account that has a statement, retirement assets that has a statement, you're
yeah,
really pulling those statements together. And then if you don't have access to that account, you're then reaching out to your financial planner, your CPA, or your spouse to say, I should have access to that. Then you're getting into the mentality that people have, that these are all mine, even if there's no foundation for that in the legal system, that it's really their separate assets. They get in the mindset of like, well, I created this business, I made this money, this is mine, you don't deserve to have some. That's just a preference, that's a feeling, but that's not actually what would happen in the court system.
yeah, absolutely. And, I think in the beginning of this, I was curious. Okay, so we keep saying the settlement offer, but what does it even look like? Like,
Yeah.
is it just literally a piece of paper in our Excel sheet? So that's why we brought up,
Oops, sorry.
we did it at the same time. This, so we can actually see kind of what you're starting to build. And this is Melissa's proprietary spreadsheet. So this is something that she's worked on for years and years, and the calculations already included. So when she starts entering the data, you'll see that there are equations in the back end that are already real time kind of splitting things into buckets.
Yeah, and in our spreadsheet, we have like kind of, the beginning, which is telling you how to utilize it. But we're really, and this is, providing a recent statement or documentation for each account is going to be important. But also it tells you kind of how to get it together. The other important piece is understanding what is the date that's important. So if the date of separation is the date in your state, that's going to be a date that you guys have to somewhat agree to was the date of separation. Sometimes it's an actual event. Sometimes it's a gray area of a few months. So, but if that's somewhere in that time frame is the date that you're going to have to get the statements. If not, a lot of times it's going to the date of the trial, which is an unknown in the future somewhere so it's just like, what's your most recent information? So this is where you're probably going to put in, like your primary house, and you put the address, and you look at Blue Book, and maybe it's, 350,000, and maybe you have some debt of 150,000. Okay. So if you look at this as an even split, what we're looking at is saying, okay, this house that has dollars attached to it and debt attached to it really has equity of about 200,000. And a lot of times for all of this, we're looking at the equity. So you have things and you owe debt on it. What is the net? You take your assets less your debt. What do you have left? This is kind of an exercise in putting all of that together. You have a $10,000 car and somebody has a $15,000 car. You can start to see that that's a little different. So now I'm putting, and this would imply that we sell the house, right? And we go and make whatever's left, we're going to split. So you're making some assumptions here. Sometimes if you have some things that need to be done with the house, you might say, well, we're going to have to put $20,000 in to go sell it. So all of these things can be, okay, we have, $50,000 in a bank account and we're going to split that. We have retirement assets, maybe of 100,000, and we're going to split that. Now, when we get down to the business or any other debts, maybe we have student loans. Student loans are kind of interesting because they're still attached typically to a person. So now you're looking at where the student loans kind of garnered during the marriage, and they went to get you to be a doctor. And now you're a doctor and you're making all this money. Like, are you going to keep that debt? And realistically, for student loans, you should never put somebody else's name on the debt, because if you died, that debt would stay with you. So theoretically, it usually follows the person after the marriage. But what you start to see at the end is we have $375,000 worth of stuff, right? Net stuff, because we've already taken out. And I forgot we have this credit card. Okay, I forgot we have a credit card of $50,000. But I'm just going to keep that credit card. So the spouse that's the wage earner is going to keep that credit card right now. Okay. So what happens is it almost looks like the stay-at-home spouse is getting too much and they need to pay some to the other spouse, because again, they're keeping the debt. But at the end of the day, we're just trying to get the buckets even. And right now, this would say that one person, because they took the debt, so that reduces how much they get, right? They got a little bit less than the other person. So this is saying that this person needs to pay them $22,000, or maybe in this particular situation, we also give them the cash and the debt. And so another thing that you would say is, we're going to go pay off the debt. So we're going to take the cash, pay off the debt, debt's gone, but this gets it to almost an equivalent.
Wow.
So you can move the assets in the bucket,
Yeah.
or you can split them down the middle. But for the most part, if we split things down the middle and you split even the cars or some other assets, you got a tractor, you got a condo, you got a boat, those are like, where are those going to go if we don't split them down the middle? The other thing is, not always is one person keeping the house, or they're selling the house. So now in this particular situation, if the person who has the job is keeping the house and they're keeping some of these other things, Now we can see that the wife is getting a lot less.
Yeah.
So we need to shift money over to her, which means maybe now she gets a little bit more of the bank account and she
Yep.
gets the retirement. And now we're even again.
Mm.
But now we're in nowhere really. Are we a 50-50 split, right? We're literally one person gets the real estate,
Yep.
each get a car. And then to even it out, we have to then, everything is split. Now, crazy enough, we did not determine, you saw me pull these numbers just completely out of thin air, and it still works in this particular situation, a made up situation, that it still works that you can split them in some ways. But what if you what if you really wanted to get this, what if this was 75,000 and now we're a little bit off, right? You can go in and maybe you just give this retirement asset. Now that's an interesting place to switch it. Typically, we then have to think of, is it pre-tax or post-tax? And that we may not want to deal with. Okay, no, go back to here. We're going to give this back to her. Now, is that really 100 pre-tax or post-tax? Another conversation, but we may want to change it into here and get it so that it's more even by just adjusting the cash. And the cash could be evened out at the end as a shore up for the entire process. The only time I'll mention this has a 50% in it, there could be a time where there could be a slightly higher percent, maybe up to 55%. That is not typically normal unless there's infidelity or there's gross mismanagement of the funds, there's hiding of assets, there's gambling, there's other types of things involved. And the court would say that there's an uneven split. But even an uneven split, I've only seen in the 50 to 55 range. It's not 60%, 70%, 100%, unless somebody has a lot of money, a ton of money on the side. And the court's like, well, you're going to be fine. But again, that's not necessarily part of the situation.
Yeah. And I love watching you do this because again and again, it just makes so much sense there's more to it than just taking the value and splitting it down the middle. And this really makes everything so clear. So if anyone's watching or listening to this and they are interested in either obtaining the spreadsheet or even working with you, what is the best way that they can do that?
Well, and the interesting part is this becomes a spreadsheet that if you put some of the, footnotes in it, you're really telling them what you're willing to offer. And so that's where we're putting some of this offer of and this is just from a sample one that we have, but this is talking about the house or a business or things like that. You can add in about the kids. This is just a good starting point for your financials, and it would be part of a bigger settlement offer. Right now, we are, you can reach us at valuationmediation.com, and we have ways that you can either work with us and we help you with it, or the Divorce Allies is really a place where you can get all of this information in a cheaper fashion. Typically working with us is going to cost $5,000 to $10,000 to do a business valuation or a settlement strategy or anything. And even to get a business valuation done right now could cost you $20,000.
Yep.
And so these are crazy amounts that if you're just getting started and I just have a simple situation, maybe you don't need all of that. The Divorce Allies is a much better solution that you get access to these spreadsheets. You get access to other professionals' information as well that gets you started. So maybe you can't fill this out totally on your own, but you can get started. You can start to pull together that information. You now see how it is pictured, and you can create your own spreadsheet that would look similar, right? And we just have a little bit more efficient way of doing it. So it's starting anywhere. And it's understanding that you have to be the hero of your own divorce journey and really take some of these things on yourself. And if you haven't seen a settlement spreadsheet like that from your team or your attorney, that's a situation that you may need to deal with. Like you may need to add a layer to your team that maybe you didn't have before. And the layer could be the divorce allies. That doesn't really impede your team. It gets you the advice you need. You can ask the questions that maybe no one's answering. And then weekly, you can ask questions every week. So if you're walking through this, you come in and you say, okay, here's my questions of how I do this. We can answer it kind of in a live fashion in the divorce allies.
Yeah, absolutely. Well, Melissa, that kind of ties up everything with the perfect little bow. So again, I put those email addresses here, and then both of those will be in the descriptions that you can access when you listen or watch this. So once again, Melissa, thank you so much, and we'll see you next time.
Thank you.